But to help us break down Amazon, we want to welcome in TD Ameritrade Network contributor Jenny Horn. Good morning to you, Jenny. Amazon, we're having a little bit of a consumer discretionary themed day, and you can't talk e-commerce, consumer discretionary without talking Amazon.
Yeah, I was cracking up listening to Tom White say his first e-commerce purchase ever was on eBay, and I wanted to joke. I think that mine was also on eBay back in the days when you had to bid for your goods. So now Amazon kind of improved Big Brother that has, seen incredible. The stock is up about 70% year to date. It's fallen about 1% this month, but incredible resiliency. I think we could even call it maybe the winner of this pandemic because of the fact that they are a delivery mecca. I mean, what can Amazon not deliver? I have had mattresses, furniture, groceries from Whole Foods, clothes delivered. I mean, the list just goes on. And that has built such a loyal consumer base. The other thing is we live in a world where we're the greediest consumer we've ever been. We want things quick and we want things cheap as we can get them and as quickly as we can get them. So because of this, Amazon has really capitalized on this last mile delivery. And they actually had news this week that they were cutting out about 1,200 drivers, which will affect, of course, small delivery firms. But, this is due in part to the fact that they had self-delivery. It grew 75% in July alone. So they are now delivering 66% of their own orders. So cutting out that middleman has been a good thing for them, and they've done a really good job of that. Now, I also thought it was really interesting what you mentioned, Alex, and that was just how huge they are. So between, of course, Apple, Microsoft, Amazon, Alphabet, Facebook, and Tesla, they account for nearly half of the NASDAQ 100. And between the S&P of those five names, excluding Tesla, of course, they account for roughly 22% and roughly 41% of the NASDAQ. So these are names, if you're betting against them, it's not doing you any good because they hold so much power in the broader market. And that kind of brings me to our first tweet, which says, at $6.2 trillion, the combined market cap of Apple, Amazon, Microsoft, and Google is now greater than the GDP of every country in the world with the exception of the US and China. So that is crazy. I mean, again, if you're betting against these names, this has done you no good. They are huge. They all had pretty strong earnings, so it hasn't done you any good. But to bring up my next tweet, which kind of talks about the scale of these companies, our next tweet is from Marco, as next Amazon dip, I'm buying in. Split announcement. So the market cap stands at $1.58 trillion currently. They trade, of course, over $3,000 a share. The last time they issued a stock split was 1999. So Kevin, what are the odds they issue a stock split similar to Elon Musk, or will they go more Warren Buffett here?
Well, I'll tell you what, and that's a really good question, and it's really good as based on the last couple of weeks with Apple and Tesla announcing. I believe that these larger cap, larger priced companies are watching very closely the action in the stock and how it's perceived when they split the stock. So I think, could this catch on like wildfire? It certainly could. The stock split has gone out of favor since I was a young to middle-aged trader standing in a pit on the CBOE where stock splits were the norm, especially in some of the names that I traded. So to see these stocks get to these levels, yeah, could this catch fire in some of these big names? I think they're watching very closely how the markets react and how their stock reacts. And though it adds no official value to the company in terms of, balance sheet and things like that, it has shown in terms of market cap and direction of the stock to be a very bullish play for the underlying, guys.
One thing's for sure, Kevin, is that it adds the liquidity and adds accessibility to all investors, to these names. I mean, Amazon, a share, $31.45. It's just so darn expensive now. If they did a 31 for one split here, you're talking about a stock that's still over $100 a share. So definitely room for that. We'll see if they follow what has become a recent trend. But Jenny, great stuff as always. Thanks for taking the time this morning, and have a great weekend. As we say goodbye to Jenny, we want to welcome in Megan Brantley, the VP of Research at LikeFolio.com, to join the conversation here. Megan, at least in terms of stock price, Amazon has not only been a winner for a decade, it seems to be accelerating over the past couple years, particularly the last 6 months. Is that the same kind of trend you're seeing within your data?
Yeah, whenever we look at Amazon, there's so many different ways that a consumer can talk about this. They could be talking about using AWS, but most often they're talking about engaging with Amazon Prime, or maybe even, watching something on Prime TV or getting something from Whole Foods. And what we see actually in this current quarter that we're in, that we're about halfway through, is that purchase intent levels are up about 6% year over year. And the reason that this is significant, because 6% doesn't sound like a lot, but this quarter that we're in didn't have a Prime Day. Right. So the quarter that we're comparing it to last year, this was its typical, high season, Prime Day generated so much consumer activity for Amazon. And so the fact that we're actually seeing year over year growth in this existing quarter, and it's not even, there wasn't this special event that the prior quarter that we're comparing it to had, that's really impressive. And I think that really speaks to the adoption of Amazon's products and services.
Yeah, Megan, when you look at your data and see that 6% year over year number, they're like, oh, that's relatively impressive. And then you realize that it's without Prime Day. And then you realize how absolutely crazy impressive that number is. And so that means that think about what the number is going to be when they encapsulate the Prime Day into that, as we get to the end of the year, as Christmas shopping begins, they are going to backload or, swell these numbers in unimaginable sizes, Megan.
Yeah, the uptick that we're seeing and the activity in Amazon Prime, especially from March to May, was incredible. Now we're seeing just generic mentions of people shopping on Amazon or buying from Amazon settle in about 20% higher year over year. So, I know we talk about that stickiness a lot, but there definitely was a huge uptick in, membership mentions, especially during quarantine. And now that people have these memberships, it's almost similar to kind of that Costco analogy that we talked about yesterday. Once you have the membership, you're more inclined to use it. So I think that, this is really positive for Amazon moving forward. Another key factor that Jenny mentioned is that, Amazon is now delivering 66% of these packages. So they're setting up so that they're in control of more and more facets of this whole process. Even from a brand perspective, we track these different brand names within Amazon, and Amazon Essentials, so Amazon branded products, those mentions are up more than 100% year over year right now. So I think that those three elements, Amazon's making its own products and then they're shipping it themselves directly to consumers in a fast way, is going to help them continue to keep consumers happy.
Yeah, and the fact that it's outperforming a not even comparable quarter by 6% is absolutely just bonkers for Amazon as it continues just to execute on all fronts. Obviously, AWS still a huge part of the story, but it's been overshadowed throughout the pandemic as the retail side of the business has just exploded. In terms of positive adoption across the world. But Megan, when you're looking at all of this insane growth this company is basically undertaking right now and scaling out, and you talk about how they're expanding out just their own delivery services and everything they're doing to kind of take control of this process, has happiness taken a hit as they transition, or has it remained in there or even increased as more and more consumers are using Amazon to get things on a daily basis?
What's impressive is that happiness hasn't really been tested. It's pretty even keel as this huge surge of consumers, onboarded their services. I think it's about 68% positive. Just to give scale or comparative, Walmart's happiness is around, I think, 50% positive. And you look at Target, and Target's is around 70% positive. So obviously, Target and Amazon are in this upper echelon of happiness from a consumer perspective. And I don't think that that's surprising, but it is impressive that Amazon is able to continue to keep consumers happy as more consumers are onboarding and as demand is increasing and they're receiving more orders and having to deliver more orders than they were before.
Kevin, I think that's extremely impressive given the fact that, Amazon isn't necessarily, thought of as this high quality goods, store. I think Target sometimes, right or wrong, kind of gets that association with a little bit higher quality, at least compared to Walmart, which maybe gets kind of the lower quality association. Of course, e-commerce changes that all a little bit. But for Amazon to be kind of on the same level as Target, but also be seen as kind of, one of the cheaper options to get goods and services and have them turned around quick, and to scale out this much and not really have that tested. I mean, this company is absolutely incredible in terms of what they've been doing, particularly over the last 6 months.
What I find impressive, guys, about Amazon is how well they communicate with you during the process of buying anything from being shipped over several days to being shipped over several hours. You are constantly getting notifications and communications from them on where your package is, if it's there already. I mean, I get a notification and then I go check the door sometimes because my phone tells me that it just got delivered. So what I'm really impressed with from my perspective and my experience with Amazon is how well they communicate with you, and they store your information. If you have a repeating order, they just continue to improve to make the overall shopping experience more and more positive. Guys, it's just amazing.
And more easy, Kevin. I think that's the huge thing. But Megan, the toughest part about this company is the stock price performance. Undeniably, it's had an incredible run, and it's not just a run that's happened over the last 6 months. It's really been a decade in the making. You're talking about a name that, 10 years ago was $122.25, and it traded all the way up to $33.44.29 as an all-time high, and has basically settled in here at $3,154. It's been growing, but the stock price has been too. Is it too high priced at this point, or has the data kept pace with the growth in the stock price?
Ooh, that's a really good question. I think that's that's $1 million question. I think that from a demand perspective, it's really impressive for us that they're able to show this year-over-year growth without even taking into consideration this Prime Day. We're definitely going to be watching into the holiday season, and as they actually host a Prime Day, to see, okay, are consumers continuing to engage with Amazon from a stickiness perspective? These new members, are they continuing to spend? Can they continue to expand their offerings from even in a grocery perspective, all of these different elements of their business? Is it continuing to grow to meet these high expectations? I think the bar for Amazon obviously is very, very high. The market expects a lot out of this name, but so far, consumer demand is pretty impressive, and sentiment isn't being tested to give us any alarm bells.
A positive picture, Megan, no doubt, as we'll see how this stickiness remains throughout the life of Amazon and as they build out that ecosystem. Megan Brantley, always a pleasure. Have a great weekend. VP of Research at LikeFolio.com.